Hello, hello, hello. Welcome to our options weekly live stream where we give you the best picks to trade for the week. We give you our own internal picks that have gone through our screeners, our trading algos, our analysts. And then we will get into what you want to see most, which I know it is the smash or pass, where you give me the tickers you want me to look at so that we cut through the charts quick and easy. You have the information you need, and you get on your way with the trades you want to see and some new ones to consider. We will also go into our small cap stock pick of the week. We have hit 12 out of 12 on those, meaning 12 weeks in a row. We have picked a small cap stock that has run the following week, which would be this week, for at least a 15% gain, which is quite phenomenal when you think about it. So, as promised, we are going to start this off with a moment of silence. Just kidding, we didn't promise that. But what we did promise is that we would get into our lessons, our truths about trading to start this off with the right psychology so that we are in fact starting this off on the right foot and we can take trades that will make us money. Because at the end of the day, if we can't manage those trades, if we don't know how to actually do this, we are not going to make anything of ourselves at all. I'll be the first one to tell you, this one is close to my heart. This is rule number 3, or truth number 3. Big bets can bring big losses. So what does that mean? It means putting all your money into one place and hoping that it works out. It's like being a kid on Halloween carrying all your candy in a small little plastic bag. When that bag rips, your candy's gone and you're sitting there picking up the pieces. Hopefully you get them all back. But what if you didn't know there was a leak in your bag? That's where this gets complicated. I learned this lesson from a $38,600 loss on Zoom options. As many of you know, I've talked about this trade many a times. $38,600 was lost. I think it was $38,663 to be exact, on one trade in a few hours. The trade went the wrong direction. Rather than cutting it loose and cutting it quickly, I just kept adding. I just kept building into a losing position. I just kept betting on the loser, even though I know it wasn't going to work. And the next day I woke up and hopefully did the same thing after Theta destroyed the value of the options and I was down a lot of money. I even put a little more on the line, telling myself that lie that it'll come back, break even. I'll be able to figure it out, get it back, blah, 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 blah. When I didn't. I lost it. It was gone. I hung my head in shame. I didn't tell my wife. I didn't tell anyone for like an entire week. I didn't even trade for an entire week. I just buried my head in the sand and hoped that it would all go away, and it did not. I would also say that this is one of the most common instances I see of new traders that lose. This is one of the most common things I see that completely destroy their account, that make it so they can't do this for a living, so they can't make money doing this. Because if you destroy your account, you have no capital to play with, and you're just completely screwed. And I'll be very honest with you. Trading with a $10,000 account is a hell of a lot easier to make $1,000 a week than it is trading with a $100 account. And if you beat yourself to death over that loss, then your mind won't be right anyway. So just to reiterate once again, big bets can bring on the biggest losses. You do not want to have everything into one opportunity hoping that it's going to pay for the rest, because that doesn't work out. Never does, never will. Sometimes you can win big on those bets, but I would argue that most traders I've seen that have won big on those bets and then did it again, lost that next one, and then they did it a third time thinking they could replicate those results, and then they lost again. And then they're in a hole. They say more money, no problems. I think it's no money, hella problems. Because honest to God, if you don't have money to make that investment in yourself to learn how to do this and trade, then you are screwed. I would say it's true in any aspect of life. If you can't invest any capital in what you want to do, then you sure as hell better have some very valuable skills, high value skills that you can use to build something. Trading is the easiest business you can start completely on your own with very little money, knowledge, or expertise. So that's why I want to hit on these lessons so that you guys are seeing the whole picture. It's not just about finding a trade that's going to pay out. It's not just about finding the best setup that is primed to run. It's much more than that. It's not incredibly complicated. It's actually quite simple. But if you don't know these simple rules, these simple guidelines, these simple truths that will save you from destroying yourself, then all the best trade setups in the world become irrelevant. Because at the end of the day, if setup's only as good as the guy trading it or the girl trading it, So cheers to the losses. I am actually incredibly grateful for that loss. That set the stage for me never allowing that to happen again. And I would ask you guys, what's the biggest loss you've seen? How bad has it gotten? Is anybody else in the 5-figure club on losses? I'm sure there's some of you here that are. Feel free to share or don't. It's up to you. And while I wait for you, we'll get into this. But I'd love to see it. I think the first step towards a new life is honesty. All right. Take that as a no. So I was just watching the NVIDIA chart. Today was very interesting. We tested off support and then we pushed back up. And today we actually closed. We closed above where we needed to, which is important because I would argue that today, looking at the money flow, this thing might actually see another couple good days. So if you go to the hourly, you can see those little support touch bounces after that huge push to 519, which was ridiculous. We found a pretty nice little consolidation here, 450 to 475. And if we can maintain that range and see continuation, I think this is actually going to be a decent setup here over the next couple of weeks, as long as that holds up. Let's extend this out so we can see it. Because this trend channel has widened, but we're trading off this past support here, which is going to turn over to resistance, in my opinion. But that gives us a nice runway back to close to $500 if this does consolidate and then see more upside. So I think that this one actually looks pretty good. But let's start out with the SPY here. As promised, as always. So remember, we were talking a few weeks ago about this channel right here between 435 and 446, S&P 500. Just to reiterate, this is a very interesting chart, and today we actually pushed back up into bullish neutral territory, and I think we're going to continue that approach back up to 446. It looks like inflation fears are not running as rampant as they were a few weeks ago. At least we have a little more information to base our decisions off of, which gives the market a little more confidence. As you all know, indecision in the market is one of the worst things there is, in my opinion, because at the end of the day, when no one knows where it's going to go, fear creeps in. And then when fear creeps in, we're absolutely screwed. And we're going to see downside, which is no good. So if we look here at the technicals, RSI bounce off 25, right? We have low here, 433. We have a higher low here, 435. As we've mentioned many a times, that would be RSI convergence or RSI divergence, sorry, but in the right direction. No, RSI convergence, right? So that means it's in line with price action, right? So we got a low here at 19 on the RSI when we came down to 433. And then we found another low, relative low. We only came as low as about 28 on the RSI. So we've got our lowest low right here, lowest low on the RSI here. And then we've got a higher low here, higher low on the RSI, which is convergence, meaning we are heading in the right direction. These are both converging on each other, which means we're probably going to head back up to 446. So I would say, as far as strategy market open, if we open between 441 and 443, I think honestly betting on 445 calls to the upside, at least 3 weeks of expiration on those should pan out quite well. As you look before, when we opened at 442, that was after hours. Sorry, as we closed at 442, we saw a push to 445 and then we sank. But we have pretty decent liquidity through this zone, which means I think we're going to see a quick movement either way. We've had pretty consistent buildup over the last couple of days, picking up off of our support 435 and hopefully pushing back up to 446. I think that should be pretty interesting. most recent lowest low is our 431 touch. Remember, we talked about how if we broke 435, then we'd probably see 431 and then 425. So those are our bear scenarios, but I don't think those really matter at the moment. We're trading actually pretty well, and I think that this consolidation bodes well for the bulls in the longer term trades. And I think that we will start moving back up towards 446, continue to move back up towards 446 over the next couple of days. So I'm going to be watching that at open tomorrow. That just to reiterate, price opens above 441 but below 443. I think those 445 calls will make for a nice intraday trade for a nice 10-20%. Quick and easy day trade, or even a swing to continuation if we push above 446. So that's what I'm watching there, and I think that could play out pretty well. I wanted to look at Tesla. Remember, we talked about this. This was our zone that we had identified when we were trying to gather up another swing down here at the bottom of this box. What we saw was long-term support touch. We're going to go to the weekly here. Long-term support touch right here. This is the weekly chart, right? So we have long-term support from the bottom at $100 a share. Holding up here, we saw the bounce. We're pushing back up. I think Tesla is trying to reclaim that 250, 253. If at which point it does, then I think it's going to go back to $300. We got decent volume coming in here. RSI is converging as well. Higher low on the RSI versus the low we saw right here. We got that 3 times in a row, 1, 2, 3, and then 1, 2, 3 on price action low. So a very, very good thing. I think that Tesla is going to hold up here. I know that the cost-cutting measures are going to be huge, and also the price lowering on Teslas are going to make them more accessible, which means sales should see a nice pickup. And so make sure you check this out. Just updated the stream schedule. There's going to be a lot of cool stuff going on, new stuff to keep you guys satisfied and wanting more and learning more and getting more and making more money. So make sure you check those out because those will be posted in that section. So yeah, what I'm looking at for Tesla is I want to see this reclaim 250. Once it does, we can then begin discussing that swing position to $300 a share. I think we'll probably run options there because that's going to give us the most bang for our buck. What we want to see is we want to see Tesla push up above about 316, 315 because then we're back in the territory of heading back to $400 a share. So make sure you keep an eye on that. Set the alarm on your chart so that you know exactly when that price breaks. Watch this trend line very closely. I highly suggest you drawing this on your chart yourself so that you every time you pull up your chart, you can see that it is holding up and holding up well. So again, weekly trend support, we're going to watch that hold. Looking at the monthly, you can see that that's confirmed. Same thing. We need to see this monthly push up, close above 250, and then should be in a good spot. On the daily, same thing. We see confirmation. We have to push above 245, give or take, to see 250. We came below this little gap down, this little doji right here. That was a clear sign of reversal under the 200-day, but that's what spooked people. I think that spooked traders in the market because we closed below that 200-day, which is no good, but that was a very brutal day. And then we immediately picked back up and took off. So over 250, look for the trade to 300. I think it'll be there on Tesla, but I'll mark it on your charts just so you don't miss it. And remember, we will play some Smash or Pass, so I suggest that you start getting those tickers in mind right now. You can drop them in the chat now, or you could do it a little later. I just want to make sure you guys are prepared and ready so that you can we can look at all the charts that you want to see. All right. So that's Tesla. Another one that I've seen via a lot of requests is AMD. I know everyone's been watching, seeing the NVDA boom. Again, this one we've mapped out already, 102 to 113. We need to see this hold above 102. If we do, then we should see a nice push up. It's been selling off quite a bit. It did find 200-day EMA support. Looking at the weekly gives you a little different picture, in my opinion, a little stronger picture, because we have a beautiful trend support going on there, but then it slightly broke, but picked up on this 34-day EMA. The thing I like is that on these last couple pushes up off of $84, we saw a really strong move over 102, which tells me that I think price is probably going to hold up and consolidate here. You do have a little cup and handle forming there. It's just a matter of how long the handle will descend. I mean, hopefully not much further, but at the end of the day, I would say that if this stays above 100, I would look at this for a trade to 113 plus. as high as 125. I think that it's definitely on the table. If you look here, this chart's done nothing but grow. Let's map that out, actually. Let's see what that trend support looks like from bottom. That puts us way up there. You can see that it's held a few times right there, which I would say is kind of a make or break point. So bottom of trend support, functional resistance, and then trend support again all the way through on the weekly chart would put us finding bottom at about 97, 98, 97 bucks. So what you want to do is you want to watch this come down and hit this trend line, and then you want to see a little consolidation towards this point right here. Basically, it's an area of confluence where price is going to interact, and we want to make sure that we see compression into that area, because when we do, price compresses for a while. Eventually, it's going to have to decompress, and usually that means to the upside in charts like this. So volume looks decent. We do have a couple days of strong buying, but sellers have basically taken control the last couple days on pretty weak volume. Relative to the past, 10 years, I would say that volume's pretty substantial. Remember, this company didn't really blow up till 2017. 2020 is when they hit 30 bucks a share. So, right. So they're up 300% from over the last 3 years, which is huge for them. But more importantly, volume is substantially greater than it ever was for those previous 10, 20 years. Oh my God, they've been open a lot more longer than I thought. Wow, they've been doing this forever. Wow, since the 80s. I did not know AMD had been open in business that long. My God. And they've had pushes up to 40, 50 bucks. Wow. $1.62. Can you imagine? You'd be up 1,000% plus. That would have been a hell of a long hold. That was 2015, 2016. Wow. Jeez. Wish I was trading then. That would have been delightful. Back then I was just wish I was even looking at this. I mean, honestly, I just wasn't smart enough to see it, which happens. So basically, we just want to make sure that we can see volume tapering up right now. Like I said, it's coming down a little bit. It's a little greater than it was. 2021 was a pretty thin year with some bigger days for buying. We want to see volume pick up relative to the last couple of weeks. If you go to the daily, you get a better idea. We've seen some big boys selling there. We want to see days like this, like 100 million volume, which is basically double what we're seeing right now. And we want to see 100 million volume to the upside more than anything else. Appreciate you, Jay. Yeah, for those of you that know, we had to put our 15-year-old dog down last week. That's why we didn't have the stream. It was just terrible, terrible experience. One of the worst experiences I've ever had in my entire life. And I'll be honest with you, really makes a boy think. I was thinking about a lot of things, and especially thinking about this. I mean, I was thinking about the stream because I was missing it, obviously, but I know you guys would understand. But I don't know, man. I'm just grateful I didn't have to worry about spending $400 to do something I didn't want to do. And I think that kind of speaks to the point of all the things we're doing here, that like I never would have thought that like putting down a dog, right? I mean, he was 15, 16, so he's old, and he was done. He was completely done. His life had basically over the last couple of weeks had become miserable. So I couldn't stomach forcing him to stay alive for my own emotional stability. But as I was thinking about it, it's like, you think about what's the point of what we do here. I think days like that, where you have to go through something grueling emotionally, really put into perspective the point of what we're trying to accomplish here, which is freedom. I mean, that's why I'm here. It's not for anything else. I mean, I love teaching people and I enjoy doing it. But at the end of the day, like I want to have enough money that I don't have to go to work at all. I mean, really. And that I can do the things I want without having to like worry about exchanging some hours for time or whatever it is I'm doing. And, as we're like sitting there and we're going through it, and obviously they walk you through like, hey, do you want to like they're trying to fucking upsell you on earns and all this bullshit. But as they're going through the price, it was like $400. It was not cheap. And it was a gift to be able to not have to worry about, oh my God, can I not do this because we can't afford to do it? And it really, like, that kind of stuff really makes me think about what we're doing here and why it matters, because at the end of the day, if we didn't have tools like this to take money you've already made and turn it into more money without sacrificing 50, 60 hours a week, that would be a bleak life. I feel for people that never got into this, that don't understand the benefits of trading and don't understand the benefits of investing in oneself when it comes to like education, financial literacy, financial awareness, just a genuine understanding of like what it means to be a corporation in the nation of corporations, because that's what America is. If you don't know how to capitalist here, then you're going to suck at life. I mean, that's just the reality. America is pay to play, baby. That's all it is. And if you can't afford that ticket to get in the game, then it's going to be a long, drawn out suffering. And I don't want to suffer like that. I just don't. And so it did kind of bring home the reason for being here, which is like to really enrich and empower people in their lives to make better decisions when it comes to money, because everyone who arrived here sucked at it at one point or another. I mean, I sucked at it for a long time until I didn't. It's kind of how this all started. Is I was like, oh my God, I learned these things and they really work and they're incredibly effective and like anyone could do it. So I just started sharing them and then people followed it. And then people were like, hey, let's make this official. And so we did, and put our focus on trading, obviously, in education, and it panned out. Hence why you're all here. But I appreciate you saying that and asking, my friend. Goes to show the value of this community goes far beyond just some stock picks and stuff like that. And I think the caring of one another is what makes it different and better than everywhere else, because, you know, we're good at trading. These trades are great. They work out, but there are a lot of people that can come up with great trades. But I just don't think the feel can be matched. I don't think the care and consideration can be matched. I don't think anyone can do what we do when it comes to actually caring enough about you to get you through to the finish line to get the result, which is financial freedom, total safety, security, and freedom, peace of mind. And I hope that from this stream, you guys are getting a lot of that. My goal here was to be kind of high level so that I can outline this stuff for you, show you what I'm looking at, and then you mark it on your chart and you make that decision. You make that analysis. You see how much you've really learned and see what you're truly capable of so that you can actually become good at this. Because the truth is, you know, do it for you all the time, you're not going to learn. So my goal was to give you enough that you guys could take it, go back, analyze it, take it apart, put it together again, take it apart, put it together again, until you're looking at a chart and you go, oh my God, this makes sense. He was talking about a demand zone here, and that could be support. And then I saw support form. I saw volume come in, and it actually makes sense what he was saying. And it does relate to my life. Who would have thought? Because I think what makes some people smarter than others, some people more successful than others, is their ability to see what goes on in between the cracks, the gray area. Like, who can take all of these seemingly unrelated pieces and put them together to realize they're all part of the same puzzle to begin with, and understand how each piece needs to interact so that this can function as a cohesive system. And I think that's what makes a good trader, is someone who can do that same thing. That's what makes someone good at business. They can do that same thing. I think that's what makes someone good at relationships. They can do that same thing. You know, someone you care about, your wife, or my wife, for example, right? Upset about something. I ask, what are you upset about? She says nothing. What I should have done is put together the pieces of like, oh, she asked me to do that 4 days ago and I didn't. And she asked me again this morning if I had done it. And then I said, no, I'll do it later, and kind of brushed it off. And then later in the day, I was talking about going to do something fun when I didn't do the thing I promised I would do that she needed me to do, right? It's like to have that awareness, I guess, or capability to take those pieces, put them together and go, oh, I totally get it. I'm asking you to go like do something mindless, fun, that lack of responsibility, whatever, when I didn't even follow through on the thing that I promised you I would. You know what I mean? It doesn't matter what area of your life you apply it to. It's just your ability to be self-aware and solve problems. And in the market, there are basically only a set small number of problems to solve. So if you can become very good at solving one or two of them, hence when we ask you those questions of what's your trading style, what do you focus on, how much time do you have, that's what we're trying to dial into. It's like, okay, you have 3 kids and you don't have more than 3 hours a day. So day trading more than likely is not going to make sense unless you're going to commit those first 3 hours of the day to specifically just day trading, and then you're going to get out of the market, go to cash, and be done with the day. Then it can work. But if you don't consider yourself to be someone who likes high octane, high energy, quick moving, high stress stuff, then it's not going to work. So then maybe swing trading makes more sense. And that was my goal for you guys, was to help you in all the trading education stuff Duck put together and that everyone's worked on, is to put together enough pieces that we can draw enough of a conclusion to start leading in the right direction. Once you're led in the right direction, you can start putting together some of the pieces to become self-sustaining and self-supporting, right? To say, okay, I remember, if we're looking at this chart, I remember him saying there was support here. And again, if you're not drawing this on your chart or screenshotting it, then you're doing yourself a disservice. My goal here is to teach this like university class, and that you guys are taking notes and you're putting this down, because at the end of the day, most of you have been here a while and have the skill level to have some element of self-sufficiency in your trading, which means if I map out this chart for you, most of you here the names I recognize at least, should be able to say, oh, you know what? Long-term trend support, even after a harsh sell-off. Say we sell off really harshly here on AMD, because there's like macro market news that forced a just total bleed on everything tech. Most of you are smart enough here to go, that's long-term weekly trend support from trend identified back in 2018. So long-term trend support. And I remember him talking about that. Even though we violated the 200-day EMA on the daily chart, this trend support is extremely likely to hold up. This would be a great opportunity to go long or buy calls. Or if we violate the support and you go $50 puts and you make 1,000%, that's something you should have seen, because I showed you where the pivot point was. You guys know that those pivot points mean one of two things is going to happen. We either bounce and go up, or we break and go down. So knowing that, those are the conclusions you could draw. And then going a step further, we've walked through, for those of you that have been through PBU and have gone through the advanced trading education stuff, you know, like, okay, when I go with options, he's always talking about at least 6 months out on the longer term trades. And he showed me exactly how to map out price action over time. Okay, so if I look at AMD, bottom at 55, it made it to $80 in 1 month, which means we're 45 days. And then let's look here. It was at bottomed out on the 9th. And then in 30 days, it moved another 40, 50 bucks a share. So basically, this thing is moving 40, 50 bucks a share in 30 days or in 45 days or less. And it's done that 1, 2, 3, 4, 5, 6 times. Knowing that, you should be able to go in and say, okay, that means I can target the $62 strike. Say we see downside and this thing just starts cratering and it violates the support. Okay. Then you can go, okay, $61 puts makes sense, but I need at least, 3 months of expiration on them, because it typically moves $40, $50 a share in less than 45 days. Remember, we talked about that bell curve. So you don't want to be hitting your strike at the end of the expiration, because theta decay kills you. But my goal is that, like, this is high level enough that you guys should be able to go in and do all that, if you know what I mean. So if you can't, then we need to have a different discussion. So that's AMD, and we took a little detour there to talk. So once again, Jay, I appreciate you bringing that up. It's something that's, nobody really likes talking about grief, but honestly, losing that dog is worse than losing probably most of the people I have in my life, if I'm being honest with you. They're there with you every day. It's unconditional love. It's just a clean situation. They just love you, period. There's nothing to get involved with. There's no drama. There's no bullshit. They just love you, plain and simple, and they're easy to love. So let's take a check-in on United Airlines. Same setup. We're on the daily chart. Let's flip to the weekly. We have long-term trend support. We did close below this 200-day EMA, which isn't great. Volume was abysmal the last couple of trading sessions, but I still believe in this position. It should hold up as long as we don't violate this weekly trend support. I'm going to say this is going to be a hold for me, and we're going to keep rolling on this position. Also, we're getting close to that time, so drop your tickers in the chat. Any tickers you want to look at, 3 a person. Make sure you put them in the chat, or we're not going to go over them. Please only put 1 per comment so I can put it on the screen. So Any charts you want to submit for Smash or Pass, which means we're going to go over and look to see if it's worth it for a long position, maybe chart out support and resistance. Type the ticker in the chat one at a time, one per comment. Yes, it is, my friend. It's a terrible, gut-wrenching feeling, dude. And then you go to feed, like we have another dog. You go to feed that dog, and you get out food for two of them, and then he's not there. It's just, it sucks. And my wife, I feel terrible. She had the dog for 15 years, longer than any of the kids, longer than me. Shit, she's probably this. I think that's her longest relationship. It's that dog. Makes sense. It's a long time. What was I going to look up? Yep, that was it. It was Shopify, because we are seeing our bottom trend support hold. So this one, very interesting chart. We talked about this. Remember, there was two possibilities of range here. We were first trading above this blue line you see right here. This was our extreme bullish scenario, very strong upside. We hit resistance 71.36, exactly as we said we would. And then we sold off into our bottom support, which is mapped off of this little trend channel right here, and we held up pretty well, which means we're in an okay spot. I think as of right now, this RSI is going to be the thing I'm going to watch most as far as momentum. I really think that as long as we can keep buyers over 50 on the RSI, we're going to be in an okay spot. That's basically neutral. We want to see RSI pushing 60 plus, though, to see strong upside. But we do have trend support here in the weekly. If that holds, we're good. If it doesn't, we're screwed. The position's over. Granted, we did make 275% on this one. I really wanted to see this one through because I thought this would be a 300-400%er at the end of the day. And I still think it can be, because remember, we talked about this liquidity zone right here. Unbelievable opportunity to go to 136 in the blink of an eye. This was over maybe. Let's go to the week. Let's go to the monthly to see how quickly this happened. This thing sold off 140 to $30 in 1, 2, 3, 4, 5, 6 weeks. So I love the possibility of a 50, 60, no, $100 move over 6 weeks. That's really what I was banking on. Again, the expiration was the January 2024. So if we see that move before October, those contracts are going to pay handsomely, like stupid money. We will see thousands of percent on those if that happens. Because remember, these were, I think it was a $60 strike. So they were in the money at one point. And once they get in the money, they just escalate so quickly. It happens so fast. So that one's that one. And then I know someone else was messaging me about LABU. LABU. This thing has been the most gimme trade of all time. Again, remember we talked about the opportunity to make $1.50 a share like 22 different times over this span. This was an easy repeat trade opportunity. We do have a nice double bottom setup forming here. We do not want to see this low get violated at 425. Again, RSI is just about bottoming out, same as it was right here, only price is price is slightly higher, which gives us that RSI divergence we were looking for, which can be indicative of a reversal. So we need to see this bottom hold. And as long as it does, this one should be a phenomenal swing trade. Again, I'm still holding a decent amount of this in my longer term kind of swing trade portfolio. I want to see swing back up to the midline to 611. I will probably take off half the position there, save myself some risk, and then eventually 750 being the longer term target there. This is one to definitely watch. As long as this double bottom setup holds, this one should be a good one over the next couple of weeks and to the upside. So, all right, let's get into it. I'm going to give you guys one more minute. Drop those tickers for Smash or Pass. I've been on the phone nonstop and I have to pee really bad, so I'll be back in 2 seconds. But drop those tickers in the chat. 1 per comment, but 3 per person. So feel free to put 3 out. Just leave them in individual comments so we can put them up on the screen. I love you. I'll be right back. All right. So let's take a look and play some. Let me do an intro for you. Hi, my name's Meta Matt. Nice to meet you. Just kidding. But it is. Or is it? What if I was Meta Matt and it was just AI that made that he's not even real? It's me talking through a voice modulator, and AI was configuring this handsome gentleman with long hair. Whoa. Anyway, we're going to play a quick game of Smash or Pass. This is your opportunity to post your chart to tell us whether or not you want to go long, and we help you decide whether or not that's a good decision by quickly looking at the chart. I like to keep them under 30 seconds or less so that you can get a quick hit on all the charts you want to know about so that you can make that determination as to whether or not it makes sense to take the trade. So let's get into it. Let's go through the chat here and find a good one. Not that many submissions today. I'm a little disappointed. Or you guys are just so confident in your trading, you don't need any help or input. Let's go with Casey Page. Shalom. Let's go with Hood. This is an interesting one I've been watching very closely. As you can see here, this consolidation is impeccable. Something you always want to see. The volume isn't as great as I would like to see. Now, that's the only thing that's leading me to be somewhat fearful that we aren't seeing as much accumulation as we hoped. However, this push up over the 200-day EMA is very fruitful and important because this buying pressure wasn't very significant, and we moved from about 950 to 13, which is about a 50% ROI in that short period of time from June to July, which means in a month, this thing moved over 50% to the upside on very thin volume, if you ask me, which goes to show and tells me that once we see something significant in terms of retail volume, coupled with algos, coupled with hopefully institutional buying, this one should be a no-brainer. I do love this chart. We had some long-term options, absolutely boom on this trade, about 100% ROI. We had our trend support here on the weekly. Let's go back to the weekly so we can get a good, clear, concise picture. We are trading below that trend support, which isn't a great sign. However, when we mapped this trade out, we did look at this. We looked at this as more of a range trade than anything else. So don't resign yourself to one tool or technique because it will not suit you in the long run. You need to have a series of tools and techniques that can fight with each other, work together, and help you understand better what the chart is really trying to tell you. Right now, this chart's trying to tell us that it's hungry. It's staying on the buyer's side. Again, look at this RSI here, right? Struggle, touched as high as 55, but found a low of 42, which means, remember, this is just RSI is just momentum. It's just buyer and seller momentum, which is telling us that momentum is staying even, but it's ticking up to the buy side, which is a good sign. Then if we look at volume, we want to see something that also confirms this opinion. Strong buying, somewhat strong. And then we got a little bit of strength in selling, but that's after a push up, so I'm not concerned. That means sellers come in between 12 and 13 bucks and they try to lay it down. That's fine. Buyers are still stronger here. Buyers picked up again. Sellers came in and fought that same buying pressure, but didn't have nearly as much firepower. If you look right here, sellers were at about 146 million on the week. This week, right here, which was the beginning of August, sellers came in half that volume at best, which tells you that the sellers are wearing thin because buyers came with some strength here. As you can see, buying volume was up at about 88, so 30% more than the selling volume, which isn't bad. But that's a good indication to us that this thing was incredibly oversold and is now getting bought back up to kind of bullish neutral. And as long as we hold above this horizontal range, which remember we mapped out 1055, when we broke out over 1055, this was then also a breakout trade. It ran as high as 1323, which gave you about 30% on the table right there. The options trade was over 100%. I'm still holding some of those options as I do think this play is still valid. We are trading above. We traded above those EMAs, came back down. We're trading above the top of our range here. If we break below, this is important, guys. This would be a good long-term idea to really map out and understand. If we break below 1020s, we may come back down to $8.83. Not the end of the world, which becomes an even better opportunity for more accumulation. I think more than likely come down to 942 and sit there. As you can see, this thing has been trying to break out to the upside a few times and been caught by sellers and pushed back down. They can only do that for so long. the buyers will get what they want, which is upside. And as we can see here, liquidity zone all the way to 35. Our next functional resistance that matters is going to be around 20 bucks. So that means we have over 100% upside. We have about 100% upside from right here before we face significant resistance. And then we're going to see some more resistance on the way up to 35 bucks. Remember, this ran to 85 plus. So the opportunity here is massive. I only think Robinhood's positioned to grow. They're getting in the newsletter business. They're getting into the IRA business. As long as they get more money under management, they're going to grow. It's just a matter of them not doing anything egregious or illegal. So Hood is definitely on my radar, and it's definitely getting that. Is definitely getting that tasty smash because it's just a good setup. I like it. It's a great opportunity to go long, and we've mapped this chart out 1,000 times. I know it like the back of my nothing. Centering. We already did Tesla, so MetaMat. No thanks. Got Hood. Uber. Mr. Uber. This guy loves Uber. There used to be a time, I don't know if you, those of you that remember, this man would sit there and just trade Uber, only Uber. And I think you only did puts, if we're being honest. I don't even remember you doing calls. I just remember you always buy the same puts, same Uber puts. It was like a ritual. I loved it. Uber is actually a decently interesting chart here. We got a nice little head and shoulders, honest to God, that would scare the living hell out of me if I was long on this, because even though the buying has been pretty significant from July on, if you look at these big old buying days, somebody was coming to the party to get a taste of some of that Uber. And even though they're extremely well positioned in the space, I still think that this head and shoulders is it's a frightful sight. Look at that. Which means I could see it come back down, trading to 30 plus. You want to find that neckline is going to be like right here. That's at about 30 bucks a share. So you don't want to see a retrace down there, but I think that based on this setup, it's extremely possible. So I'm going to have to, unfortunately, I'm so sorry, Duck. Don't have to get a path, baby. Uber is a verb and it's genius. I mean, what they've done, you get an Uber. Oh, you're going to call Lyft? A lot of people still call it an Uber. So they're not going anywhere, but for the sake of this exercise here and going through kind of just a quick, are we going long or not? I'm going to say no. That's going to be a pass. So let's keep going. Jay Patel. Amico. Oh, this is one that we were talking about last week. Absolutely booming. If you look at that there, this thing had some tawdry chart. Look at that consolidation. What's their previous high? 46.52. You know what? For old time's sake, I'm going to give you a taste of this. We're going to do a little fib retracement, just see what feels good. Above the golden retracement to the golden mean, which is good. That's an extremely good indication here. So basically, every time stock comes down, there's that we've talked about that reversion to the golden mean strategy, which is the 61.8% fib. That more often than not, I would say these charts will always come back to retrace to that golden mean, which again is this $33.92. That happened not once but twice. Then sold off. So that's how you can really count on a nice dead cat bounce to get you through the day and make some money. So it looks like realistically, I'm going to get rid of this now. This thing's heading back to test right here, which is the top of this head and shoulders that we previously saw. If it can stay above, wow. So if it stays above 36, wow. Okay. You earned it, my friend. Super sexy above 36. I said it. It's here. I agree. I love it. Above 36 and change, 36 and a quarter, call it. I think that's definitely breakout territory in an industry where there's opportunity for breakout right now. And if you look at the RSI, we're not even like too drastically overbought, even though we're at 70. This thing has been significantly overbought for a long time, pushing as high on the RSI as 77, which is 74 to 77, which was these past pushes here. So if it tests 74 but pushes price to 42 to 45, I think that's a nice little trade. Again, breakout momentum only, I would say over that price. That's the only thing I wouldn't touch it otherwise. Now let's take a look at your other submission. MA MasterCard Incorporated. Wow, this is actually a hell of a chart too. Look at that. Let's go to the monthly. Look at that. My God. Same thing. Anybody even reasonably involved in tech in the early 2000s that bought any of these names, spent 100, 200 bucks. I mean, God, the people who had a couple thousand to throw in the ring on some of these smaller tech names, think about it. This is up 4,000%. So let's see. Let's go to this calculator here. Let's do 1 year at 4,000%. Initial investment. Oh, it won't even let me go that high. That's so stupid. That's so stupid. Give me 1 second. These are all terrible. Say a principal of $1,000 at 4% interest. Wait, what? This thing is stupid. I quit. I can't even think right now to do that math. If you put $1,000 in this at $1 and it was up 4,000%, I mean, you're at what? What would be that? What would be that final value? It's insane, is it not? Definitely be 400K plus, right? I always get these mixed up when you get into all those zeros. Like when you're looking at that, I mean, think about it. NVIDIA, I was up 1,700% on like a couple $1,000 position that netted 40K. I want to say it would be 40K, but I mean, that's $1,000 to 40K. Imagine if you put in 100 grand or 50 grand or even 10 grand. I mean, unbelievable. Oh, 40K. There you go. Jay's the man. So think about that for a second. You put $1,000 in something, you're walking away with 40K in less than, 15 years. You did that 10 times over. You made a lot of money. And for those that actually had money back then and were putting, $10, $20, $30,000 in these positions, they've made millions. So that's what scares me about names like this, because I feel like we're getting to a point in terms of price appreciation where eventually someone's going to have to pass the buck, and it's not going to be pleasant when it happens. I have thought that for a long time. I've had this, it's not even conspiracy. I would just say that all of these boomer investors that have vested interest in all these tech companies that have seen just enormous growth, inevitably they will kill their interest in the company and take their cash and walk away and pass the buck. And if the company isn't positioned enough to facilitate like beyond strong growth, then it's just going to crater. But all these people get convinced to like, oh, this is goodbye now. And then it craters and they're screwed. So like companies like this always scare the hell out of me. But I will say, looking at that monthly chart, damn if this isn't appealing. It looks like it's primed to actually test new highs. And I guess we would have to use that fib retracement to figure out exactly how high it's going to go. 434 and then 582 would be a twice extension. So, oh, look at that. That's how you take that strategy. It broke above the golden mean, came back down, found support there. That's why it's called reversion to the golden mean. I'll make it a little bigger so you can see it. That's why we call this the reversion to the golden mean. That 61% fib comes down, it tests it again. It breaks above, comes down. Where does it test again? The golden mean. And power of ratios is all encompassing. And I think, especially to determine longevity of a bullish position, this is a great practice to use, because you can find the bottom of that move, whatever it is that you're mapping out, high to low. Then it breaks out. And if you have time on the chart, you can watch and see, okay, it reverted to that golden mean again, which is a very strong indication of support, right? Which tells you that this chart has bullish longevity, because we're looking at the weekly. It does look like volume is tapering off, though. So people definitely knew what they were doing with MasterCard back in the early 2000s. Volume is pretty thin comparative to, those golden years of people needing credit. RSI is tuned up, so RSI's next high is 80, wow, to 85 on the weekly. So this thing could have some room. I think 430. Oh my God, I can't believe I'm going to say it, but I think I think it's I think this is I think this one's smash-tacular, if I'm being honest. I can't shy away from it. I mean, yes, it's a breakout trade and it's a little scary because we're not trading reversal or long-term consolidation, but realistically, this RSI's got quite a room to go, which means momentum turns up. This thing could absolutely rip. And on posted on the back of strong earnings and strong financial outlay, I think payment providers are just the look at every issue everyone has in this day and age with the cost of things. You got to realize that like anywhere from 3 to 5% of that is completely to blame. Who's completely to blame is these payment authorization and provision companies. The 3% that every merchant's paying to the credit card company. The 3% like we pay to Stripe. So we take like if you use a credit card when you buy your membership, take basically 10% right off that from the start. We're paying out almost 10% between like your credit card processing fees, Stripe fees, chargebacks, chargeback protection, like all this other bullshit. So they're cutting margins left and right. Most business owners are forced to raise their prices to account for it. But guess what happens when they raise their prices? They just get more money. It's ridiculous. So I guess they are extremely well positioned to capitalize. I just think they're the scum of the earth. But I will say, whoa, we're having a poker tournament. That's badass. Oh, that's interesting. I didn't know we were doing that. I want to play in that. So check the link right there. Go to the announcements section of the Discord. Yeah, I'm gonna have to check that out. I want to play in a poker tournament. Hell yeah. Okay, so I'd say yeah, that's getting a smash to 434. Over that long term, realistically 582. I think that's a little ambitious. I would personally aim for 500, and then I would scale out of it on the swing position. But I would take the time to look at that chart. I think it's definitely got some opportunity there. Good find, Jay. The ET, the movie or the stock? This is an interesting one. This one came up actually on my screener, bullish setup in energy sector. I've been very focused on energy as of late because I do think there's some upside here. I'm going to already tell you because it was on that screener. This one's tasty smash because we've got previous high 1795. This is the weekly. This monthly chart is what interested me the most. So huge sell off, like regression down to $4. But this, you got to remember, this thing IPO'd and started around $2-3, built up a pretty healthy base, pushed to 1795, huge sell off. But buyers kept trying to pick this back up here. If you look at 2016, buyers tried to clean this mess up and keep price up, failed. Then they tried again down here. So buyers are very adamant about keeping this up, which means that this definitely has a lot of room to run. Now, I don't know the outlay of their business, but I will say that some of these energy companies are very well positioned to be the $300-400 stocks in the future. Case in point, look at Enphase. 2018, they were listed at 65 cents. They ran to $339 a share. So don't get it twisted. There's definitely opportunity there. And I think that these are the ones to watch. This chart is just screaming bull on the monthly. And if you look on strong months, you saw $8 to 10, so $2 plus move. I mean, the last time we had big momentum like this off 1137, we moved from 1137 to 1485. The next like target I would have personally is 15 and change, and then I would aim for like 16, $17. I think that's probably your best bet. Hey, I'm on my live stream. I love you. I'll call you back. Bye. That's my wife. I try not to ignore her call and then text answer. She gets all pissy about that. Next up, NIO, aka the Chinese Tesla. This chart really is disappointing on the monthly. If you look here, we had some very strong momentum from $7 back up into the $15 range, and then sell off back down to 1077. What I expected to see was what we saw down here, 360. We traded this move. I alerted this at like $2 and change. This thing boomed from $4 to 66 and change. This was another 2,000% options trade. I'm still holding some of those shares from like a $3 or $4 cost basis. Still up a couple 100%. Now I sold a good chunk on the way up because who's going to turn down thousands of percent? Not me. So we need this chart to hold up. The daily gives you a little better impression. Consolidation attempt happening here, 1053. Remember, we talked about the breakout over 950. We gave you that whole move before it even happened. We were mapping this out right here back in, was it early June? that's late June. Sorry. So mid-June, we were mapping out this breakout. Remember, we said that after support tests, when we see that confirmation of the breakout, which is break up and then test as support right here, this was the buy at like 950. This thing ran to 16 bucks, easy 50% plus trade, 75% plus trade for you. We're consolidating again right here, 1051. It's got to push up to 12 to see strong continuation there. It's trading definitely against resistance right here. So this one will probably consolidate horizontally for quite a while. We just need to see it stay above 950. So unfortunately, this one's going to get a pass. But let's say friends, because this is one we don't want to forget. We want to keep looking at. This one's got a good opportunity here. Moving on, the stick man asphalt BBY. Didn't they go fully bankrupt? Or are you saying Best Buy? Best Buy, right? Not Bed Bath and Beyond. Please tell me, because I don't even want to look at that garbage. Okay, man. Okay. Sorry, I just gotta see what's going on here. That checks out. Interesting. This is interesting. They're like the only retailer left that seems to evolve. And at least as far as tech retailer that hasn't gotten completely destroyed by online sales. And these massive buys are what interests me. We're going to pop over here. We're going to look at the institutional interest here. I think that may give us a pretty interesting picture. So 52% insider sales. Now, were they selling? Yeah, they're selling institutions. They have to. They're recently downgraded quite a few times. Price targets right about where they're priced at now. So they're coming up on earnings here, end of month. 9.74, 14, 10. So earnings decelerated after COVID. And then let's go to the NASDAQ website. Let's look at earnings. Let's look at earnings estimates. Okay, so Q1 of 24 is anticipated to be very strong. Their next two earnings are not really anticipated to be anything crazy. So to me, all that says is that there's opportunity for downside, because if they don't beat by a huge margin, no one's going to care. But if they don't meet at all by a small margin, everyone's going to care, and this thing's just going to hemorrhage. So unfortunately, fortunately, we're going to pass. Roku. Remember, we drew this move out when we basically drew it out in Cran, and we were pretty spot on, except it happened a lot more quickly than we thought. Remember, we talked about this consolidation, and then a boom, we tested 98. This options trade was an absolute banger. Congrats to anybody that took it. This was a huge moneymaker. Nice stair step up with consolidation. Let's look at the weekly. We are holding just at support here. Remember, this one is very, very clear to me. This chart's very simple, very simple. Above 60, then we're going to 67. If we can stay above 67, then our next target was 98.91, which, mind you, it hit 98.44. So I just want to throw that out there. Kobe, told you, crushed it. So there's no excuse not to make stupid money on this one. Anyway, we need to see this come back up. I'm going to say right here, we're at support, and I actually kind of like it. So I'm going to actually just tell you very quick. I'm getting you a smash, baby. Roku, I love you. I love the way you taste. The biggest Head and Shoulders. I was really hoping we'd push 160, complete the Head and Shoulders, and be done with this one for good, but we're not. So we're going to watch for another test to 98. As long as we hold here above 75, I think we're golden. We're good. We have a nice little tune-up in the RSI that's staying pretty healthy here. As high as 67. We want to see that push back into the 80s to really see a boom here, like we did back in COVID. Another one, I want to say this. And I'll say it once, we traded this from like, I don't even know, $70 a share to like almost 405, 450. And then those puts I called were up 10,000%. At the end of the day, it took forever to even get somebody to buy them because there's no liquidity. I bought $150 puts right here, 470. And we were at like $80 a share when I tried selling them, but no one wanted to buy them. So is what it is. Let's do one more because I got to get going. I got my kids' football practice today. Got to get there. Ooh, the triple M's. I know we mapped this one out, and it's actually hanging around right around where we wanted it to consolidate, around just above $100. So the range would be 178 to 100. Very interesting. Huge selling, though. That's something that makes me somewhat nervous. But RSI is bottoming at 50. This one could be a great opportunity. I know this one's also a dividend payer. Very, very, very interesting. So I'm definitely giving this one super smash. This is a peaked in mid 30s super smash, which is as good as it gets. This is actually very interesting. We're going to need to map out an options trade here because I think this is prime time opportunity for one of those. I love this range 99 to 178, and it looks like it's actually trying to hold here. We saw a pretty strong pickup off of this bottom. So we bottomed at about 95.79, but it's not overbought on the rebound at all. This thing has maintained pretty healthy buying. I think that this is pretty interesting. Very interesting. Yeah, I'm going to take a look at this for our long-term options trade stuff because this one is very interesting. So beautiful. All right. As always, if you guys have any other charts you want to look at and you didn't have the chance to submit them here or somehow I missed them, I do think I got every one, but just in case I didn't, just send me a message on Discord. I'll take a look at it and get back to you as soon as I can. I got football right now with the boy, and once I get back, I'll get into those. I love y'all. Stay blessed now. Bye-bye.